If you plan to retire rich and your investments are not in a Roth IRA, then you could be missing out on a massive tax advantage.
And so the Roth absolutely mathematically kicks the traditional's butt. And here's why. If you take $200 a month from age 25 to age 65, 40 years, and you invest that in a decent growth stock mutual fund, you're going to have $2.5 million in there. However, only $96,000 of the $2.5 million is actual principal that you put in. So if you did a traditional in that, you would have gotten a tax break on $96,000. You would have not paid taxes yet on $96,000, but you'll pay taxes on the entire $2.5 million as you pull it out. If instead you did this with a Roth, you would pay taxes on the $96,000 and zero taxes on the rest of the $2.5 million.
I think we can all agree that taxes will be the largest expense we pay in our entire lives. And people who invest in Roth IRAs pay approximately 97% less tax on their investments than people who invest in a traditional IRA or 401k. Here's the crazy part, though. Very few households make contributions to IRAs. In fact, only 15% of households contribute to a traditional or Roth IRA. But that's not even the interesting bit. Check this out. Of those people who did put money in an IRA, 65% of them put money in a Roth IRA. So what is it that this tiny minority knows about Roth IRAs that the other 85% of us don't seem to understand? Let's get into it. Hi, I'm Justin Saffel. I'll be your instructor. Hope you're doing well, and welcome to the Creative Investor YouTube channel, where I give you actionable tips on personal finance, investments, and self-development. If you're considering a Roth IRA but need answers, you're in the right place. By the end of this video, you'll have a solid understanding of Roth IRAs, their benefits, eligibility, and the rules you need to know. First things first, what exactly is a Roth IRA and how does it work? A Roth IRA, short for Individual Retirement Account, is like the rock star of retirement accounts. Here's the deal. You contribute after-tax dollars into this account, which means you've already paid taxes on the money you're investing. But here's where the magic happens. Once your money's in a Roth IRA, it grows tax-free. That means no taxes on gains, dividends, or interest your investments generate over the years. This is a game changer. Now, the real kicker is when you retire. When you start withdrawing money from your Roth IRA after age 59 and a half, those withdrawals are entirely tax-free, and there's no required minimum distributions, unlike traditional retirement accounts. You have full control over when and how you access your money. Picture this. You've diligently contributed to your Roth IRA for years, and now, in retirement, you're pulling out your earnings without Uncle Sam taking a slice. It's your money earned and grown over the years, completely tax-free. This means you can enjoy your retirement years without the worry of the hefty tax bill. Before we dive deeper into these details, I want to hear from you. Have you already started investing in a Roth IRA, or is this entirely new to you? Let me know in the comments below. Are you confused about which retirement account might be right for you? Let's compare the traditional versus the Roth IRA. Traditional and Roth IRAs are popular choices, and understanding the differences is key to making the right decision. Let's start with the traditional IRA. Similar to a 401k, when you contribute to a traditional IRA, you're using pre-tax dollars, which means you get an immediate tax deduction for your contributions. This can lower your taxable income for the year, potentially saving you money in the short term. The money you invest grows tax deferred, meaning you don't pay taxes on gains until you start withdrawing in retirement. Now, the Roth IRA takes a different approach. You contribute with after-tax dollars, so no immediate tax deduction. However, the real beauty here is tax-free growth and tax-free withdrawals in retirement. When you reach the age of 59 and a half, every dollar you withdraw from your Roth IRA is entirely tax-free, including all the earnings it generated over the years. With a traditional IRA, you get the upfront tax deduction, which can be a significant immediate benefit. It can reduce your tax bill and allow your investments to grow without the drag of taxes. On the other hand, the Roth IRA's reward is all about the long game. Imagine a retirement where every penny you withdraw is tax-free. No worries about the tax bill eating into your hard earnings and savings during those golden years. Plus, Roth IRAs have no required minimum distributions, giving you greater control over your retirement income strategy. It's about who can take advantage of the remarkable benefits of a Roth IRA. Let's talk about who's eligible for a Roth IRA. It's not just for the financial elite or a select few. Eligibility for a Roth IRA is refreshingly straightforward. Age, income, and tax filing status are the main factors to consider. First, age doesn't matter. Unlike some retirement accounts, age is a limiting factor. Whether you're 17 or 72, you can open and contribute to a Roth IRA as long as you have earned income. There are some income limits. Here's where it gets interesting. The IRS sets income limits to determine who can contribute to a Roth IRA. These limits depend on your tax filing status and can change from year to year. Generally, if your income falls below the limits, you're eligible to contribute the full amount allowed. Here's a chart which may help you out. For the tax year 2023, here are the basics. If you're a single filer and your modified adjusted gross income is below $129,000, you can make the maximum Roth IRA contributions. If you're married filing jointly and your MAGI is below $204,000, you're also eligible for full contribution. There's a phase-out range where your contribution limit gradually decreases if your income falls between these thresholds. If your MAGI exceeds the upper limit of the phase-out range, you may not be able to contribute directly to a Roth IRA. In summary, eligibility for a Roth IRA is open to anyone with earned income, regardless of the age, who fits within the income limits. Now, when can you access your money in a Roth IRA without triggering taxes or penalties? What are the 2023 Roth IRA withdrawal rules? Roth IRA withdrawal rules are designed to provide flexibility and tax benefits to investors. Here is the key information you need to retain. First, for contributions, you can withdraw your contributions at any time, tax-free and penalty-free. These are the funds you initially put in your Roth IRA, and since you've already paid taxes on them, you can take them out whenever you need without worries. As far as earnings go, to access the earnings in your Roth IRA investments without taxes and penalties, there are two main requirements. First, you must be at least 59 and a half years old, and second, your Roth IRA account must have been open for the last 5 years. Once you meet these conditions, you can withdraw both contributions and earnings tax-free. There are certain exceptions to age and time requirements for tax-free withdrawals. For example, you can use up to $10,000 of earnings for a first-time home purchase if your account has been open for at least 5 years. Additionally, if you become disabled or pass away, your beneficiaries can access the funds without incurring taxes. When you follow these rules, you can access your Roth IRA savings, including earnings, without worry about income taxes or penalties. And remember, unlike traditional retirement accounts, there are no minimum required distributions with a Roth IRA. You have the freedom to decide when and how you want to use your funds. This flexibility can make your retirement planning and financial life a whole lot easier. Now, finally, practical steps. How to open a Roth IRA. Opening a Roth IRA is surprisingly straightforward. Here's what you need to do. First, gather essential information. Before you start, make sure you have personal information handy, such as your driver's license, social security number, bank details, and your employer's information. Having these documents readily available will streamline the process. Second, choose a beneficiary. You'll also need to designate beneficiaries who will inherit the account if needed. This is an essential step in ensuring your assets pass on as you intend. Third, contribute funds. You can contribute to your Roth IRA with the lump sum or set monthly contributions. Just remember to stay within the annual contribution limit, which may change from year to year. Fourth, select a custodian. If you don't already have a custodian, consider a reputable financial institution like Fidelity or TD Ameritrade. They can help you manage your Roth investments. By opening a Roth IRA, you're taking the first step toward financial freedom. You're securing a tax-free haven for your retirement savings. Imagine watching your investments grow over the years, knowing that when you retire, you can withdraw that money without paying a dime in taxes. It's a reward that can make your retirement years truly enjoyable. Well, that wraps up our deep dive into the Roth IRA. I hope you found this video informative and insightful. Remember, the path to financial freedom and creative investing starts with knowledge. If you enjoyed this content, don't forget to like and subscribe and hit the notification bell. Thanks for watching. Until next time, stay financially independent.